What's going on, guys? Welcome back to another episode of Hustle with Jesse W. And today we launch a multi-part series for new traders. All right, guys. So the very first thing we're going to go over here is what type of trader do you want to be? Do you want to be a scalp trader? Do you want to be a long bias trader? Do you want to be a short seller? Do you want to be a swing trader? What do you want to do? So, we're going to jump right in here and let's take a look here. Everybody's going to end up in the same place, Investopedia, when you Google most of this stuff. So what's day trading? I'm not going to read you all this jargon here because you already know what it is. Day trading is when you buy a stock, an equity today, and you sell it within the same day. Point blank. If you buy a stock at 7 a.m. in pre-market and you sold it at 4:15 after hours, that's a day trade. If you bought it at 9:30 and sold it at 12 p.m., it's a day trade. If you bought it at 9:31, sold it at 9:32, it's a day trade. We know what day trading is. That's how you got here because you know what day trading is. So there's no need to go over that. That's just the type of trading. Swing trading is when you buy today and you sell tomorrow, or you sell next week, or you sell a month from now, or you sell 3 months from now. Okay, swing trading is the same thing as day trading, only you're holding it longer. Instead of selling it within the same day, you're selling it within a day or two, a week or 3, a month or 6. That's what swing trading is. Then you have things like scalping. Scalping, you can scalp up to the upside or to the downside, meaning you can scalp by buying low, selling high, or shorting high and selling low. Short selling is when you basically bet against the stock. If the stock you think it's not going to go over $3, you short sold it at 3 and then you covered it like at 280, meaning you bought your shares back at 280. It's like betting against the stock. I mean, that's the easiest way to explain it to you. If you want extreme details, go to Google, what is short selling, and you can read all that. But we're not going to get into all those super tiny microscopical details because they're not important to the video. Now, scalping, in a sense, is very simple to explain. Scalping is generally done with bigger size. You're not going to scalp a penny stock, a stock that's like under $10 with like 100 shares. Because just really, if you capture 10 cents on 100 shares, it's $10. It almost doesn't even cover the average commission cost. So scalping you would do, with bigger share size, but let's use very small numbers and very large numbers. We're going to do 2 examples. One is if you scalp a stock with 1,000 shares, you bought it at $2, you sold it at 210, you made $100. That's scalping. You bought a stock at $2 with 10,000 shares, you sold it at 210, you made $1,000. But with scalping comes great risk as well. Okay, it's cool because you're in the stock a very small amount of time, so you tend to mitigate risk in that sense that you're not exposing your funds out there to the market for extended periods of time. But at the very same time, it's like a double-edged sword. We've seen stocks fall dramatically within seconds. So you could very well be in 10,000 shares of a $2 stock and have it flush down 40 cents, and all of a sudden now you're down $4,000. Okay, you could be in with a thousand share position, have it flushed against you 40 cents, and all of a sudden you're down $400. So it's something you got to be very aware of if you scalp, if that's your technique, if that's what you like to do. Then you have dip buying, where you buy a stock that's made an upward move, it dipped down into support, you got long, you bought in front of that support, and now you're watching for a retest of those highs. That's dip buying. You got to figure out what type of trader you are, whether you like to trade momentum, whether you like to trade fundamentals, whether you like to buy dips, whether you like to short sell. That's something you have to figure out for yourself. I can't do that for you. But once you figure it out, then the next step is going to be practicing it. And how do you practice trading without risking money? Because every trade has risk, right? You paper trade. You can paper trade multiple ways. You can paper trade with paper, like literally a notepad and a pen, and you just write down on the paper how you want to like enter and exit your position. So you could do that and be honest with yourself, because you're not going to BS anybody else but you when you paper trade. Or you can do it with software like Thinkorswim. Thinkorswim has uh, a trading platform. Well, TD Ameritrade has a trading platform called Thinkorswim. It's the same platform that you would use if you're an active trader with them. Okay, but you can use paper money. Register for paper money. You can click that, and it's going to walk you through these prompts, and you can set up a free paper trading account. Okay, and you can practice your trading. You can practice your strategies. You can find out basically what type of trader you are safely. Now, one thing that I would tell you to do in your paper trading, be it on paper or be it on something like Thinkorswim, is don't use more money than you're going to start off with. If your goal is to open up a trading account with $5,000, for example, then make sure that you're paper trading with $5,000. Don't paper trade with $100,000. And anything you want or need, you can call them and they'll adjust it for you on your software, at least as of right now. So don't trade with $100,000 if you only have $5,000 to trade with. Don't trade $75,000 positions if you only have $5,000 to trade with. You catch my drift? Try to keep it as realistic as possible and make rules for yourself. If you are not a successful paper trader, don't move on to real money, okay? Make it like a barrier, like a test, like a graduation. When I was paper trading when I first started, I was extremely hard on myself, stressed out as well, and nervous while I was paper trading because I knew if I didn't do well in paper trading, there was no way in the world I was going to put my hard-earned money in a live account and trade with that. I wasn't going to do that. Man, I worked way too hard to me to just throw money away. All right? So that was me. Okay? That's one thing you could do. Thinkorswim. The next one, which is what I did because I'm not a Thinkorswim fan, simply because I feel the software is complicated. That's just me. Most people love it. I traded with eTrade Pro software. I think it's super easy and I love it. But I used Dash Trader Pro. Okay? And I used this one, the $150 a month. It's not free. It cost me $150 a month to use this paper trading account. And I paper traded for like freaking 6 months. Okay? But it was worth it to me because I figured if I traded with my real money, I was going to lose more than $150 a month when I was starting out, especially. So why not test everything out, figure out what type of trader I am, and do it safely with paper money. And I did it with Dash Trader Pro. It cost me $150. It's a lot less money than I would have lost. Figure out which one you want to do, and you can go ahead and go that route. Now, once you've graduated, well, not even once you've graduated. Now, once you've started paper trading, make sure you always trade with a plan and stick to your plan. It's very important to cut your losses. Cutting your losses, man. If you don't cut your losses, you're in for a rude awakening. If you go into trades and you don't know where your risk is, where your stop is going to be, where your line in the sand is on losing money, then you've already lost. Because trades can go against you extremely fast. Okay, extremely fast. And if you're not prepared to cut the loss, if you're stubborn and you get emotional and you say, oh, I'm going to hold it until it turns around, sometimes they don't turn around, guys. Sometimes it's simple. Let me give you a good example here. Look at this 5-minute chart of BIOC. Had you bought this stock right here at $2.33, you're all the way down here now in front of $2. You've basically already lost 33 cents. And if you had 1,000 shares, talking about $330. If you had 10,000 shares, you're talking about $3,300. Where do you draw the line? A stock can continue failing and failing and failing until oblivion. Look at this one that I'm going to show you here. You're not going to believe this one. This is HMNY. Look at this stock. This stock is a complete failure. It's at a penny. Look, you can't even, it's zero. Like, you can't even get as low as it is. Stocks can go to zero. So are you willing to blow up your entire account because of emotions? Because you're like, it's going to turn around. You can be wrong. But it's easier to lose $100 today and make back $100 tomorrow than it is to lose $2,000 today and make back $2,000 tomorrow. That's the recipe for blowing up your account. If you're a trader that you normally make $100 a day and you lose $2,000 today, it's going to take you a while to make that $2,000 back. And if you try to make it all back in one sitting, chances are you're going to lose, not two, you're going to lose $4,000. So you have to know that you have to draw the line in the sand and be like, okay, I'm not going to hold it below this, because you really don't know if it's going to turn around or not. It's just the way it is. So you got to be willing to cut losses. If you cut losses and you're disciplined about cutting losses and you don't mind that you lost $100 today, guess what? You're probably going to have a good shot at making this, because you can make that $100 back tomorrow, but you can't make $1,000 back tomorrow more than likely. You got to cut losses. So those are the things you want to make sure that you familiarize yourself with at the start. Figure out what type of trader you want to be. Figure out what type of strategies you're going to use. Figure out what paper trading platform you want to, practice in, and practice cutting losses. Set your trade plan and trade your trade plan. All right, guys, so that's it for this video. On the next one, we're going to discuss chat rooms, stock trading chat rooms. You've heard lots of stuff about those on Twitter and on StockTwits. Let's discuss those on the next one. See you there.